Hi students, how are you? I hope you are fine there. What about my previous lecture video? I don't say both videos are perfect quality, but some issues are there, the quality. And also, I don't know whether you fully understood the videos, the video lecture or not. Even though you try to watch it 2 or 3 times, at the same time you should read the handout also. So I suggest you all you can use the phone or earphone. So today lectures I'm going to continue the balance. So I'll try to finish the first handout to today. Suppose time is not enough. I have an idea to take another video lecture to finish this first handout. Now I'm going to share the screen. So I'm going to take the PowerPoint. So students. Another information, I hope you check your LMS. I put your exam details also. So the exam time, everything is there. But later I will inform about exam exam method in mode of assignment. That should be the first assignment. So another issue is going on. Still some students are not looking the LMS. Please tell your friends as soon as possible looking the LMS. Yes, here. So the number of objectives there. So the previous two video lecture we already discussed about is the first objective, second one, third one, the fourth one. Also we discussed partially about objectives, fifth objectives. Lectures I'm going to cover the fifth one and sixth one. So in addition, I want to tell you all, so in the particular PowerPoint, the PPT consists some additional information. You know that those are the additional information you should study. Those are directly or indirectly connected with these objectives, because I didn't put those things in the objective as objective, but those are there. Those are the additional PowerPoint. You couldn't see those information in your handout, the Word format or PDF format handout. So university, you are the university guys, so you should study some additional things. That's better. Then you can enhance your knowledge, skills, or whatever it is. So don't always rely on the handout. This is explain. That's a guide. The handout. Don't think that handout is enough. You should read the textbook. So you have to refer some other online materials. The webinars are there, which are posted by different professional institutions. So such a way you can improve or enhance your knowledge. So in this PowerPoint, some additional information are there. So today also I'm going to touch those additional information. So another one I already uploaded that PowerPoint also. So later when I finish this first PowerPoint, at the time I will upload again the updated PowerPoint for your view. No worries. These things we discussed in the last two video lecture. Today I'm going to start from this one. Needs or necessities for an auditing. Yeah, a lot of things we discussed in the last two video lecture. Today I'm going to talk about this needs or necessities for an auditing. So then you can ask a question: what are the needs or necessities for an auditing? Why the companies want to do audit? In addition to public and private companies, because that's the mandatory requirements as per the Company Act number 7 of 2007. Other organization also, institution also want to have audit. Why? So some reasons are there. Here, one by one, we will see what are those reasons. Here, the first one says the a way out of the problem of credibility in financial accounts and reporting. This is very important. The term credibility. So the now we're talking about these needs or necessities for an auditing. The first point says the way out of the problem of credibility in the financial accounts and reporting. This is the issues. This is a question. That's what we appoint a auditor. That's what we request the independent person. That's what we require the expert person from outside in order to make sure the credibility. What's the meaning of credibility? It means the trustworthiness of the information which are available in the financial statement. There's a believability. So we can't believe because as I told you in the earlier previous video lecture, so in the public company's point of view, the who prepare the financial statement, management. The management mean accountant or financial analyst or directors or managers, whatever the whole the people they prepare the financial statement. Those are employees. They receive the salary. Just. But who are the owners? Owners are the equity shareholders or ordinary shareholders. Those who are sitting outside the company. Owners are sitting outside. They elected particular body. That body is called as a board of directors. They direct the company instead of owners. So these people, when they prepare these employees, these management people prepare the financial statement. They figure out all the numbers, all the figures. This much of the sales, this much sales there, this much cost, this much profit, or this much loss, this much assets are there, liability. So these people, owners, so equity shareholders, never they easily believe those information which are given by these managerial people or employees. That's what they require the auditors. The reason is that they expect that trustworthiness, reliable information. So the credibility, they expect some credibility, valuable information. So the first need, so the need or necessity of for an auditing is that the problem of in order to way out of the problem. So so the to overcome the problem of credibility in financial accounts and reporting is to appoint an independent person, referred to as auditor, to investigate the report and express an opinion on it. That's a frustration. That's a first need or necessity for an auditing. That's a big issue. So that's what the companies they spend huge amount of money for the external auditor. They pay the huge amount of money, 6 lakhs, 7 lakhs, because in order to make sure the credibility in financial statements. So that's only they can make sure the credibility or trustworthiness or believability through this audit. That's the first need. Simply just enough this one. Second one, another issues. Modern companies, we are living globalization world or 21st century. You know the high technical world. So you can imagine how many companies are practicing in Sri Lanka. How many companies, local companies are there? Foreign companies, foreign banks are there. HSBC, HDFC. Those are the foreign banks. Foreign companies are there. Nestle, Omega Garment PLC. So many foreign company level company. So the McDonald. So that's kind of the different. So the modern companies have expanded some across political boundaries. So Sri Lankan companies are practicing in some other countries. They have some branches, outlets in some other outside the border, outside the boundaries. For example, commercial bank. You know the commercial bank have so many branches within Sri Lanka as well as outside the Sri Lanka. So they have the branch in Maldives or Bangladesh. So the kind of things you would think about other companies. When we say the Omega Garment PLC, there's a garment factory. That's a the Ketov was in Italy. Ketov is in Italy. There's an Italian-based company. They have the branches some other countries in Asia, Europe, so then America. So that kind of we can think about the role of the accountant when they prepare the accounts. That is easy. Do you think that easy? So normally, for example, so the normal company that is a this bank, normal bank, you can take. They don't have the branches in outside. No? So normally that Sri Lanka only have branches within the Sri Lanka. So that accountant can easily prepare the financial statement because they had to comply all the rules and regulation. They only, that's enough to comply. Just long and laws and regulations, so whatever long economic standards. But you can take the thing about this commercial bank. They have branch in Maldives and Bangladesh, some other countries. So then they have to, when they prepare the final account, they have to incorporate all the income come from Bangladesh, Nepal, Maldives. So that accountant they have, that's somewhat difficult. They may feel somewhat difficult. So the here modern companies have expanded some across political boundaries. Yes, the preparation of accounts for such companies is complex. Yes, so that's why it is therefore very essential, it's important that such accounts are examined by independent expert. So at the particular condition, if it is complex or difficult, so that is then definitely those accounts must be examined by independent person. That's auditor. That's what they need. Auditor. That's a second need or necessity for an auditing. Third one is the general one, the common one we already discussed. The financial statements are required to comply with various legislation and standards. What does it mean, legislation? There's a law or the rules and regulations. That is what is a legislation. So the each and every public companies, when they prepare the financial statement, they have to comply with all the rules and regulations. That is somewhat called as GAAP, generally accepted accounting principles. So that is a term, GAAP, G for generally, A for accounting, generally accepted, at the next A for accepted accounting, the P for principles, GAAP. This is the bigger term. This include all the rules and regulations, principles or concepts or standard. Everything come under the generally accepted accounting principles. So all the financial statement they have to properly adopt these GWP. So then how can we make sure that the particular company financial statement properly comply or adopt these accounting legislations or accounting standards? So complaints with this requirement can be assured, can be um, the make sure can be verified if audit is carried out on financial. Through the audit only we can get to know. Yes, so the company's financial statements are comply with all the rules and regulations. So generally accepted accounting principles. So that's what we need audit. There's a need audit is arised, or there is a necessity of audit arised. Last one is a general one. In order to fulfill the need of various stakeholders. You know the stakeholders, the term I'm going to explain here. Stakeholder is, I think I already the previous video lecture also explained is yes, I'm not sure. Okay, the stakeholders are something different from shareholders. Shareholders should be the part of the stakeholders. When we say the stakeholders, different parties come under the term stakeholders. There's a bigger one. Stakeholders may be the shareholders, customers, employees, managerial people, government agencies, government authorities, tax departments. So the present investors, future investors, lenders, suppliers, creditors, etc. There's so many different, lot of people, lot of examples are there for the stakeholders. But shareholders should be part of the stakeholders. We take these stakeholders. That should be this one is the shareholders. This small part should be indicated by the shareholders. So in order to fulfill the need for different stakeholders, because different stakeholders mean the different users, decision makers are there. People need these information. So the people need the quality information. How can they get the quality information? So then, so in order to satisfy them, in order to give the quality information, definitely the need for necessity for auditing arrest. So some examples are there. So I don't say this is only the need or necessities. So you can search, you can Google, or then you can refer some of the textbooks. You can see some more other needs or necessities. Just that you can elaborate in the example. Sometimes examiner may ask a question, you can say something. in your way, in your word, your own words. Okay, then we move to this one. This is something different or important one. Demand for audit and assurance. Earlier one, need or necessity for an auditing is a demand for audit and assurance. The first point says the attributes or characters of information. Different characters are there: relevance, reliability, comparability, fair presentation, etc. A lot of things are there. I hope you already studied the financial accounting too, no? The first is second semester under the conceptual framework. Definitely, you might have studied about this, the characters of information, attributes. So the attributes of information provide a basis for the assurance functions. Clearly understand? These are the characters of information. Different characters are the base for the assurance functions. Okay. So users of assurance services require some assurance, some verification as to the quality of information. So we already discussed in the previous video lecture under the assurance. So assurance services are the professional services that enhance or increase the quality of information. So users of assurance services they expect some kind of assurance in the term of quality of information. Third point says the role of auditing and in assurance. The role of auditing and assurance is seen as being especially important to reliability and relevance. We already discussed, no? When we say the quality in terms of reliability, relevance. So with regard to financial report audit, what does it mean, financial report audit? You should understand, you should remember, no? Number of time I told you that financial report audit means it's a financial statement audit or external audit or company audit or financial audit or statutory audit. We'll discuss later. So with regard to financial report audits, the role of the auditor is to be satisfied, yes, that the general purpose financial report represent what it purports. Purports mean but its intention or claim to represent without bias and the contents are verifiable. Then next point says, as an independent expert, as an independent person, there is also expectation that the auditor is satisfied as to the relevance of the information for assessment of the performance, financial position, financing and investing, and compliance of the reporting entity. So why the company called an independent person? The company, because the independent person, the person satisfy these things, no? The particular company have the audit, why they spend huge amount of money, 7 lakhs, 8 lakhs, because of they create a credibility information, quality information to the users. So that is why as to the relevance of the information, because once the audit is carried out, so then the company, people, the users or audience or the stakeholders, the 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 trustworthy is increased. They believe the credibility increased because information credibility increased. So relevance of the information or assessment of the performance in order to assess the profit or loss in the P&L account, particular P&L account is financial statement is audited by independent expert. So they satisfy, the user satisfy. So the financial position, they can when they see the statement of financial position, they can get to know the how much liability, how much assets. So there's once they have the audit, the particular financial statements are audited, the audited financial statement. So users are very happy. Yes, they can get sort of trustworthy. They get some sort of belief about the financial knowledge. They can feel some kind of valuable information. Financing, investing, and the compliance of the reporting entity. This role arises because most financial report users mean different audiences are there. That's simply the stakeholders. So users are there, not in a position to produce financial accounting information personally or to establish the credibility of the report. That's a problem The role arises why this we appoint this independent person, why the company spend huge amount of money to appoint this independent person, 5 lakhs, 6 lakhs, 7 lakhs. Here, why the company pay the 5 lakhs, why the commercial bank um, pays 8 lakhs to the Ernst and Young, why the International Bank pays uh, 7 lakhs to the KPMG, because the role arises because most financial report users are not in a position to produce financial accounting information personally. So do you think that when we say that these users, these stakeholders, which you purchase some shares in commercial bank, you are the users. If I purchase some shares in commercial bank, I am also one of the users of commercial bank. So similarly, the more than 1,000 users are there all around the world. Around the world, not only Sri Lanka. Maybe the commercial bank, when they issue the order shares, maybe the person from Switzerland, the person can purchase the shares. No any limitation. Foreign shareholders also, the foreign people also want to invest in the Sri Lankan company. That's a no boundaries to the business. Even the person from America or US, the person also can purchase the commercial bank order shares. So then the person user is there, user is living in America or US or UK or Australia or New Zealand or America or Africa or wherever it is. So here, do you think that all the, for example, the commercial bank, the commercial bank have 10 million users? My question: do you think that all 10 million users are educated people? Educated people? No. You know the research finding says that most of the business people, investors, more than 50% is uneducated people. But rarely the educated people involved in the business process, no business, including me, including maybe you know, because the mostly the very success business people, they are uneducated people, so they are doing the business in a good way. We should learn some session from those people, no success people. So that's why the role arise why we appoint these independent people, why the company appoint these independent auditor, because most financial report users, audience, financial report users means who one is going to use the financial statement audit report of this financial statement of this particular company. This financial report users, the person is expecting to use. So if I have an idea to purchase commercial bank order shares, if I have an idea to invest in commercial bank order shares in future, definitely I am very interested to read the financial report of commercial bank. Financial report mean the balance sheet or the P&L account or cash flow or whatever it is. So because users are not in a position to produce financial account information. Myself, okay. Actually, my background is a management discipline as a lecturer in the account department. So that's what I have very familiar with this. Not much, that to certain level, I have an idea about this financial statement. I know what are the financial statement of P&L account, statement of balance sheet, the cash flow statement, or the second things. I know some concept of depreciation or the intangible assets. So property, plant, and equipment, current asset, this kind of have some knowledge, idea about this. You also have some idea because you also management people. So you already studied, have some idea. What about other people? What about other users? Do you think that all the people studied commerce, or level, or A level, or university, all business people, all users? No. So then, how do those people can understand this financial statement, their P&L account? So because you can say they simply prepare. Yes, the company right to prepare the financial statement in a simple way because the purpose of easily understand by other people, the users, even the users are not in the position to understand. No? Person doesn't know what is there, what is financial statement, what is statement of profit or loss, what is statement of financial position, what is statement of cash flows. So what is the depreciation? So that's what they should do. Only they know this auditor's report. Only they depend on this auditor's report, independent auditor's report. So just a read, just a search the term true and fair. So here, the role arises because most financial report users are not in a position to produce financial accounting information personally or to establish the credibility of the process. Those people cannot make sure the credibility. Actually, they don't know what is this one. Then how can expect that? How can say this? They can able to make sure the credibility or reliability or trustworthiness of the financial information. So they don't know nothing. They don't know anything about this one. So that's what by which information is prepared and presented to them. That's what an auditor report is to be prepared and presented to those users. The need for the independent financial report audit arises therefore because of the following conditions. So then the need for the independent financial report audit, it means the need for external audit, need for financial statement audit or company audit arises because of the following condition. Please clearly understand the exam point of view. Examiner may ask these kind of questions. So in this area, this important part. So you should clearly understand earlier one. So you need necessities for an auditing. Some needs are there, necessities are there for auditing. This says the need for independent financial report audit arises because of the following conditions. So then, for example, for your final exam, examiner may ask questions. What are the conditions lead to the demand or need for independent financial statement audit or external audit? Then should be able to give the answer. What are those conditions? Four conditions are there. So most of the textbooks say these four conditions. So some textbooks say the terminology they use something different. So the condition one says conflict of interest. It means a need for reliability. So always we think about reliability. When we say the audit is assurance, so this reliability is very important. Second condition says the consequences. Consequences. That's the effect. Third one says the complexity. Complexity of report. Difficulties of report. And last one says the remoteness of users or separation of users, separation of audience. One by one we will see. The first condition says there is this first condition create a demand for auditing and assurance. There's a conflict of interest. That is very important. You should clearly understand what does it mean, conflict of interest. Something advanced, but you should know. This is actually the conflict of different interests are there. Different interest. You also have some interest. I also have some interest in your budget. Most of the 80% of people, 80% students have more interest in the subject of audit and assurance, or 80% students don't have interest in the particular subject. The rest of the students may have interest. So that's such a way. The first condition says the conflict of interest. It may need for reliability. Due to this one, this reason, this condition created demand for audit and assurance. So the first point says the user mean who are the people going to use the particular the company's financial statement. Users or audience or stakeholders. For example, the users, the maybe the owner being the public company point of view, that is equity shareholders or the ordinary shareholders are the owners of the public companies. May perceive, expect an actual or potential conflict, actual or potential conflict with a preparer. Preparer means who will prepare the financial statement in the particular company or firm is a management. So the first point is important one says the user may perceive, may expect an actual or potential conflict, trouble with a preparer. Actually, as I told you earlier in the previous video lecture, what is happening in the public companies? No, the thing is no. These owners are sitting outside. They elected a particular group of people. Those people, the group is called as a board of directors. The directors supervise a company on behalf of these owners. So when prepare the financial statement, P&L account balance sheet has flow. These management people, these employees prepare the financial statement. After 12 months, they prepare the final statement. Then they can publish and hand over this final statement to the owners in the annual general meeting. This is a profit. This much of profit you earn for this particular financial year. This much assets. This much liability. So that is the definitely the do some may perceive. That's what I already told you that these owners never believe their indication. They are because their employees prepare, management prepare the financial statement. That's what these people, owners, they can't. They never believe easily these financial statement which are prepared by these management people. Because they feel, perceive, expect they may did something wrongly. That's what indicate here. They perceive an actual or potential conflict with the preparer. Why? Management would have an incentive, interest to present biased information. Yes, biased means fake or wrong or misinformation, wrong information in the financial report. Why management could have an incentive to present biased information? Because the reason is this report is P&L account or balance sheet or cash flow statement or statement of changes in equity are a means to communicate information about management performance. Because these managerial people just employees, they receive the salaries, they receive the bonus. So the bonus, what is the meaning of bonus? No, the company perform well. Definitely, the particular employees of the company they can receive the bonus, double time salary or triple time of the salary. So in order to get that kind of benefits or bonus, so there's some other kind of benefits. These people, what they do, they wrongly figure out some information, such a way these owners feel, perceive, expect. So they might did something wrongly. The biased information is there. So they sometimes they altered they some intentionally they increase their profit. Then only the if they perform they such a what because these owners or shareholders believe these managerial people when they prepare the financial statement, P&L account or balance sheet, these people right to show during this 12-month period, the particular company performed well. If they want, they can do because those people prepare the financial statement. No? So, because why they behave such a way in order to get the benefits? Because if they show the company performed well in the last financial year, so then they can get some sort of benefits in terms of bonus. So salary increase, increment. So that's clear. Okay, management would have an incentive to represent biased information in a financial report. Report means the P&L account of balance sheet has flow statement of change in equity because this report are a means to communicate the information about management performance. This conflict creates this type of conflict. This stuff creates uncertainty as to the objectivity of the information preparer. So that's who one prepare the information on this financial statement is a management. So then this kind of conflict create uncertainty. So there's uncertainty, not confident about the objectivity of the information preparer because these owners, these equity shareholders, these ordinary shareholders, they may feel such a way these people might do something. They might have did something in the financial report in order to show show increased profit. Actually, the company earned this much of profit. So these people wanted to show the company perform well. So that's what these people might have did might have did something to this profit. They try to show the profit is this much of profit. Actual one is this one. So here, an independent third-party examination will reduce possibility of bias. We already discussed in the previous video lecture. because we discussed the audit is very important because the person is independent, because third party, external person was an examine. That kind of examination will reduce possibility of bias. So that's there's a the very rare chance, very, the few chance for this kind of bias information, because the person is a purely independent person is going to examine the financial report, enhance the credibility of the information, enhance the credibility of the information. So that's a first condition. Conflict of interest. It means a need for reliability. That's the first condition. Lead to the demand for audit and assurance. Please try to understand clearly. Second condition says the consequences. Consequence made the this effect of the particular things. No effect. The consequence mean there's a second condition lead to the demand for audit and assurance. When a user is contemplating using information to make decision, as I told you earlier, the previous video lecture. So in order to make the decision, users need information. So what kind of information? Quality information. Why? When they use the quality information, they can make better decision. So when a user is contemplating using information to make decisions of consequence, the quality of that information is of direct concerns, because there's everything depend on the decision, depend on the information quality. In which quality? The information quality, because they are going to make the decision based on the information. So that's what is something gone wrongly, something goes wrongly, so because of this information quality. So that's what is because the different users, more than 10 million users, are going to make the decisions based on this information reported in the financial statement. So that kind of information should be quality information, then they can make a better decision. So the good consequence, because continuously they make decision. There's a direct concern. Quality of that information is direct concerns when they make the decision, because they are going to use the information to make the decision. So that information should be quality in terms of relevance and reliable. Please understand. The second condition is the consequence. This is also another condition. The reason this lead to demand for audit and assurance. Third one is there. Condition 3, the complexity of report, of financial statement, or difficulty of financial report, a financial statement. Here, the simple things complexity mean the subject matter and the process by which the data is converted into information is complex. We accept, no? We agree. Yes, because the company, these management people prepared a financial statement as a document. The P&L account, statement of profit or loss account, statement of the balance sheet, or statement of financial position, statement of cash flows, statement of statements equity. They prepare the report, like a report. So how they prepare the report? So they did something, no? The accountant or financial analyst or these management people, in order to prepare the financial statement as output, they converted those information to this kind of another way. They converted information to this one. Then only they prepared a financial statement. So here, complexity means the subject matter and the process by which the data is converted into information is complex. Yes, and as it becomes more complex, the possibility of errors is increased. Yes, because actually the finally when we see the when we read a statement of profit or loss, yeah, that's we can say sales. Yes, this much amount is there. Then cost of sales. Yes, this much. They deduct that cost of sales. Then it's a gross profit. Yes, this much. Then they reduce these administrative expenses or financial expenses, selling and distribution expenses. So the old expenses are reduced. Then they get a the profit before tax. Then they reduce the tax. So this amount is the final amount. So we don't know we have to have the knowledge to how to they derive these sales or cost of sales, how they calculate the cost of sales. we know because we have some background, management background or commerce background. So in even when they converted this, for example, sales is this much of figure 10 million. So in order to calculate the sales, they did a lot of adjustment, no? Because think about a public company point of view, multinational companies, Coca-Cola companies, Amazon.com, Google. So when they prepare the financial statement, so you can imagine what kind of step they followed to take. Then think about when they reduce the cost of goods sold or cost of sales. So how they calculate, the equation, opening stock plus purchase minus closing stock. So some final amount is there here. Simply we can read, we can see, we can visible. But we should know that we should underwrite to understand how they derive this cost of goods sold, because number of steps they follow to calculate this cost of goods sold. So this kind of situation, the subject matter and the process by which the data is converted into information is complex. Yes, because and as it becomes more complex, yes, the further it become complex. So because that kind of commercial bank, because they have the branches in Maldives or some other countries, Bangladesh. So those finally they prepare, the head office prepare the financial statement. They have to incorporate all the income from all the branches. They have the different branches. So you think about the Bangladesh commercial bank, they send their details in the different currency, Bangladesh rupee. Because the Maldives currency is different. So they had to convert those things to Sri Lankan rupee on the particular exchange rate. So a lot of issues are there because that's the things are there. So there's a chance for possibility of errors is increased. Yes, there is a chance. There's a likelihood for these errors. So the average user, the companies may have more than 10 million users. For example, there's Nestle, the Coca-Cola, Unilever, Amazon, the Google. So what happened? The average user of the information doesn't possess me have the required level of expertise. As we discussed earlier, yes, we should understand all the users, average ordinary people are there because different business people invest in a particular company. We can't think that those people are educated people, they can easily understand it. So that's not the reality. Then the reality is something different. So if you go to the ground level, you can understand because those people actually they are very big people, big businessmen, invest huge amount of money in the particular company just, and the person don't know how to read this one. So that doesn't possess the knowledge, the required level of expertise to judge the quality of information. Even the person know how to read these things, so the person don't have that much of knowledge to make sure the quality of information in terms of relevance and reliability. So the person cannot make sure the credibility of information, the quality means the credibility or trustworthiness of information. So that is good or bad for the company? No, that is bad for the company because person should know because the person is a decision maker. No, the person needs this information to make decision. Already the big investor. So that's why that's a reason create the demand for audit and assurance. That's what the company is. In order to satisfy their users or stakeholders, they appoint the independent person or auditor. They have the financial statement audit. The third condition. Then the fourth condition says the remoteness. What is the meaning of remoteness of users? Remoteness means the separation of users. Separation means users because the commercial bank when they issue the ordinary shares, so the more than 1,000 people try to invest on the commercial bank ordinary shares. So they purchase, different people may purchase the shares from the commercial bank. Do you think that only the Sri Lankan people, only Sri Lankan citizen only purchase? No, don't think that. So the other people, those who are living in other countries, UK or Europe or Australia or New Zealand or the US, those people also invest money on the particular companies there. So those users are living different part of the world. So then the remoteness or separation of users. Users are living in Sri Lanka, India, Asia, Africa, America, Europe. So here, that is another reason for the demand for this assurance. This says the separation of owner and manager. Owners, as we discussed earlier, as I mentioned you earlier, and therefore the user and the preparer, yes, whether due to physical distances are there. Actually, even within the particular country, the head office of commercial bank is there. They prepared everything is done by there, done there. So the I am if you assume I am one of the user, I am living in Vietnam. So you may be another user. You may be another part of the country. So the physical distance is there. Legally distance means because the person purchases shares from India, so the legal legislation regulations are different in Sri Lanka and India. So at the time, or cost constraints, due to cost restrictions, to prevent the user from assessing the quality of the information. So then that's impossible to make sure the assessing the quality or credibility of the information. So there's another condition or reason is a remoteness of users that automatically create a demand for audit and assurance. I hope you understand. So these are the important part in this particular handout. This is very useful one. Exam point of view also very important one. I hope you can get more idea when you watch this video again and again. Then we move to this one. Yes, this one says these four conditions, as we discussed in the previous slides. The first one is a conflict of interest. The second one is a consequence. Third one is the complexity of report. Fourth one is a remoteness or separation of users. These four conditions have given rise to the following three hypotheses or theories. Please understand. These four conditions given rise to the following three hypotheses to explain the demand for auditing. So sometimes the examiner asks a question. So briefly describe what are the theories or what are the hypotheses are connected with the demand for audit and assurance. This may be the final exam time. The examiner may ask a question. So briefly discuss or describe the theories which are related to demand for audit and assurance. Then you should be able to write down these theories with the explanation, with a brief explanation. So 8 marks questions. No? So the try to understand the questions. So what the examiner asks. Try to answer the question only. Don't write the things or what you know. Never the examiner expect that one. The person expect only the correct answer for the questions. So theory is to explain the demand for auditing. These hypotheses could equally be used to understand demand for assurance or audit and assurance. What are the theories? 3 theories are there. The first theory, the examiner says that is a agency theory. Please remember, the first theory, they say the demand for audit and assurance. The agency theory, yes, just we discussed in the previous slide. Discuss further. Then second one is information hypothesis or information theory. And the third one is insurance hypothesis or insurance theory. Please remember, different textbooks you can see the more number of theories. The most common theories are that these 3 theories: agency theory, information theory, and the information hypothesis, and third one insurance hypothesis. One by one we see. The agency theory or the stewardship hypothesis. So agency theory, another way you can say the stewardship hypothesis. So then the term for the agency theory, some textbooks you can see this, they say the PA theory, PA, P for principal, A for agent, principal agent theory. So now we can see what the theory says. In an agency relationship, agency theory is the agency relationship connection between this principal and agent. What's the meaning of principal and agent? The school, we normally say the principal, no? Not a principal. It's different. Principal is wrong. The principal is who are the principal owners. The public company point of view, who are the owners? The equity or ordinary shareholders. So in an agent's relationship, other side is a preparers, the agent. Agent means it's a brokers. Agent, who are the brokers in the public companies. So these the owners elected a particular body, the board of directors. So the managers, they are the agent. So the when we say the agency relationship, it means a relationship between these ordinary shareholders and the management of the company. That is indicated by the agency relationship. So the agency relationship, investors, yes, investors mean the owners. Owners means the ordinary shareholders as principals, okay, in the relationship. Interest, interest mean they hand over, they delegate their resources, delegate their companies. To whom? To these managers, this agent. That's a story I told, already told you that, no, the previous video lecture. So these people, the more than 10 million owners are there. It is impossible to accommodate all the people inside the company. That's what in the annual general meeting they elected particular people, group of people, particular body to represent, to direct the company, that is board of directors, on behalf of themselves. So when they elected these people, they simply they hand over all their company to those people to direct the company. So interest their resources to managers, yes, who act as their agent, yes, or as stewards, person who, people who they look after the company assets. Then we can say the stewardship, the stewards. They are the people who are looking after the particular company assets of the resources. However, in this relationship, a potential conflict of interest arises, as I told you earlier, because definitely then something happen. It means, what is the meaning of potential conflict of interest? As I told you, as I mentioned, the potential conflict of interest mean conflict of interest, more than one interest. More than one interest means different people have different interest. So in this case, who are the different people? One is the owners or equity shareholders, users, owners are there. Other one is the managers or preparers. So the different interest mean, actually the whatever the company, their purpose is to maximize the profit, or then the further you can say the maximization of shareholders' wealth. This should be the interest of the company, objectives of the company. So that simply you can, that is a purpose, the objectives of the owners. The public company point of view, who are the owners? Or shareholders. But they are expect, but they are objective. They always expect to maximize their benefit, maximize their wealth. Then we can say that one is a maximization of shareholders' wealth. They expect that one. So that's what they elected this group of people, and they send off these people to direct the company on behalf of themselves. Then what these people should do, this elected body, these management people, they always should work for their objectives, maximization of shareholders' wealth. But actually, what these people do, they write to these people, write to behave for their own benefit instead of the maximization of shareholders' wealth. Instead of owners' benefit, they write to behave in order to get their own benefit. So that is the point. Says the different people have different interests. These managerial people have different interests, their own benefit, their own interest. But these people, owners of the company living outside, those people have another interest. These people always expect to maximize their benefit, wealth. These people try to earn some hidden benefit. So here, however, in this relationship, a potential conflict of interest arises. Yes, it means management should be trying to maximize return or benefit to investors or owners, but have an incentive to consume or reallocate resources for their own benefit. This is a point the conflict start. Conflict arises between these two people. This is very popular in the public company point of view. Please, I am again and again I stress you all try to understand these kind of theories. So, in an attempt to monitor their activities, yes, due to this conflict of interest, these owners want to monitor their activities, these management people activities. Managers are asked to account. So then the owners expect they request those managing people after 12 months, you should produce the report, financial statement. You should prepare the P&L account, balance sheet, as well as statement of change in equity for the level and performance of resources under their control by producing periodic financial report. So on request of these owners, these people must prepare this report. The report itself indicate their performance of using these resources last 12 months. The 12 months performance activities actually reflected in the financial statement in terms of the sales or administrative expenses or whatever it is. That's what these people expect the report. The report itself indicate this much of profit or loss, so this much assets, so this asset, this much of cash flow, investment activities in the cash flows, financing activity this much, or operating activities this much. So the statement of changes in equity says this much of these activities are done. Because of this potential conflict of interest, complexity of the subject matter, and remoteness or separation of the investors from the managers, the financial report may be biased. Due to these reasons, definitely the financial statement may be biased. That's what we need audit. Such a way, there's an agency theory explained. Such a way, the demand for audit and assurance. So then you can argue, then yes, because why we go for audit? Because when the managing people prepare the financial statement, as per the rules and regulation, they have to properly adopt all the generally accepted accounting principles. That's all. So how can you make sure whether they complied with this accounting GAAP? Only the way the audit, no? For audit, we can make sure that the company, when they prepare the financial statement, they properly adopted this generally accepted accounting principle or not. Without audit, we can't make sure. So here, generally accepted accounting principles is one attempt to reduce the bias. One attempt, yes, somebody is okay. Further, we need that should be the audit. Getting assurance on this report from an expert who is independent of management also increases the confidence in the information that is communicated. So, in such a way, the agency theory say the demand for audit and assurance. Second one is the information hypothesis, information theory. What the theory says, this theory simply this says, the title also says the information hypothesis. Always the audit and assurance, we need information to make a decision. The information should be quality in terms of relevance and reliability. Such a way, this hypothesis explained here as an insurance service is a means of assurance service is a means of improving the quality of information. We already discussed. For example, investors require information to make an assessment of expected returns and risk associated with their investment. So definitely the investors require information to make different assessment about their future return and risk. So assurance service is also valuable because as a means of improving financial and non-financial data. As I mentioned earlier, in the previous video lecture, because the assurance service actually enhance the quality of information. Information may be financial or non-financial. So for internal decision making, detecting errors and motivating employees to exercise more care in preparing records. There's a second theory or hypothesis, high information hypothesis, says such a way say the demand for audit and assurance arise. So the information hypothesis also state the investors benefit through the increased confidence of external users of information. So third hypothesis there, this is also an important one. It's a very interesting one, insurance hypothesis. What does it mean insurance? We already know the insurance. The third one is the insurance hypothesis. The first point says the insurance hypothesis state the demand for assurance occurs, yes, from those who may suffer loss when things go wrong. Some companies, they did something wrongly, so definitely they suffer loss. That's normally. Obviously, we understand. No? The company, when they do something wrongly, definitely they may suffer a lot. So the insurance hypothesis states that a demand for assurance occurs from those who may suffer loss when things go wrong. Another way, you know, that Sri Lanka, as per the Company Act, that is a audit is mandatory. This financial report audit is mandatory or compulsory to all public and private companies. That is a, you should remember that one. So that's a you should remember. So whether they want or not, they definitely all the public and private companies, they must do the audit. So definitely they have to have the audit. So this says that through the insurance hypothesis also demand for audit and assurance occur. Through the 11, the information hypothesis also lead to the demand for audit and assurance. Another one, agency theory. Through the agency theory, also say the lead to the demand for audit and assurance, except these mandatory requirements. Clearly understand, no? For example, if an organization goes into liquidation, what does it mean by liquidation? So particular business goes into the insolvency situation. What does it mean, insolvency? You know the meaning of solvency, no? Solvency, we normally use the term, I try to solve it, hit the solution. Insolvency, they couldn't do anything, no? So another term is a business term, popular one is the bankruptcy. The bankruptcy mean simply says this liquidation or insolvency or bankruptcy, the particular firm or business unable to settle their debts by using their assets, unable to settle their liabilities using their assets. You know the balance sheet or statement of financial position. Finally, we make sure the asset, total asset is equal to total liability. So the situation indicate the insolvency means or liquidation means the particular firm unable to settle their total liability, the liability by using their assets. The particular situation indicate the insolvency situation of the particular business or firm. So then has no here, if an organization goes into liquidation and has no resources to pay its debt, it may be possible to recover some of the losses from the auditor. That's a very interesting particular situation. There's a probability, there's a likelihood to recover some of the losses from the auditor. Through the audit, company fail, they can recover something. So because the auditor carefully checked all the document, no? So sometimes the company might have made some mistake. So auditor, during the audit process, it may be auditor may find those mistakes, and then they can get some good things from those mistake. Due to that mistake, the company the company goes into the particular situations, no? Bankruptcy situation, insolvency, because particular situation actually led to this insolvency situation. During the audit process, when the auditor find those things, then they can recover something, recover some of the losses from the auditor. So such a way this hypothesis explain, as auditors are required to have insurance against such potential losses. This have given rise to a deep pockets effect. Please understand the meaning of deep pockets effect, in that the auditor is seen to have a greater ability to pay. Please understand. So some MCQ questions the examiner may ask. So this hypothesis says the auditors are required to have insurance against such potential losses. This have given rise to a deep pockets effect, in that the auditor is seen to have a greater ability to pay. It's the meaning of deep pockets effect. It means that one left standing after corporate um, corporate collapse, no, a failure, corporate failure, with a good amount of available fund. That's the auditor. Such a way, this hypothesis, that hypothesis, insurance hypothesis. The auditor is the person, the possible to recover some of the losses from the auditor. That's indicated by the insurance hypothesis. Such a way, the audit is very important. Audit is that is create a demand for audit, and assurance. Such a way, insurance hypothesis explain. So then we can say, I hope you understand these things, no? How the theoretically you explain this demand for it, and then we discuss the condition lead to this demand for it in assurance. Then we discuss this one, the data necessities. Now we will move to this one, the features of auditing. So when we study auditing in assurance, definitely we should understand what are the features or aspect of auditing. What are the aspect or features? First one, the simply you can understand audit is a systematic and scientific examination. Systematic and scientific. They have to follow some systematic approaches or scientific examination. Second feature says audit is undertaken by an independent person. This is another aspect. Person should be independent person. Third one, audit is a verification of the results. Audit is a verification or examination, or verification or examination or ascertain of the results shown by the income statement or something. Fourth, indicate audit is a critical review of the system of accounting and internal control. This is another aspect or feature. The next one, audit is done with the help of vouchers, document, information, explanation received from the authorities. This is another aspect. Such a way audit is done. That's another feature or aspect. And the other one said the auditor has to satisfy himself or herself with the authenticity of the financial statement and report that they exhibit a true and fair view of the state of affairs of the concern. Is another aspect. Last one, the auditor has to inspect or compare or check, review, scrutinize the vouchers supporting the transactions and examine correspondence in its books of shareholders, directors, member association, and articles of association, etc. In order to establish correctness of the books of accounts, I don't say these are the only the these are the only features of auditing aspect. So many features are there. So your exam point of view, just enough to remember the three or four features. That's enough. So you can further search some more features of auditing or aspect of auditing in different textbooks. You can refer also through the online resources, so you can search and find it. So that is important one. This is the advantages of audit. So when we say the advantages of audit, so the already we discuss audit and so a lot of things we discuss. So then we discuss some needs or necessities for audit. Then we discuss the demand for audit in the conditions we discuss, and theoretical base we discuss what are the theories lead to demand for audit and assurance. This is says advantages. What are the advantages for it? That's what due to the advantage should be there. That's what the company spend a huge amount of money because of enjoying the advantages. So here I plan with the divide the advantages, different types. What are the advantages to the business people or companies, the investors' point of view. Then is the general advantages. One by one we see. So when we say the advantages of an audit to the businessman or business people or the companies or firm, so many advantages are there. Some advantages are only limited here. You can find so many advantages. The different textbooks, or you can Google. The first one is a detection of errors and fraud. That's a good for the company. That's the first advantages for business people. Just because audit, the can detect of errors and fraud, detect and prevent errors and fraud. Second one, loan from banks. So because when the company have audit, so they can easily borrow the loan from the bank. This is another advantage to the businessman or business companies or firms because of audit. Third one, company, the reputation may be increased. Build a reputation, good name to the company because of this audit. Because the audit makes sure the credibility of the information, trustworthiness of information. That's what it create, increase the reputation, build the reputation of the company, image of the company or firm or business person. Proper valuation of assets because audit during the audit process. So they because the auditor will check all the document. That's what they update all the assets in according to the market price. fair value, current market price. So they properly update, properly value the all the asset of the company, because auditor may ask questions. So this is good for the company. They properly made the records, no? The government acceptance. Simply that's obviously no, because they have the firm business have the audit. There's a as for the company, no, there's a government, the recognition should be there. Acceptance is there. It is update accounts. Finally, the suggestion for improvement. Definitely, finally, the auditor, the provider gives some suggestion or recommendation for the improvement of the company, of the future improvement. So these are the so many benefits are there. I don't say these are the only the benefits of the business people or business firm. So many benefits are there. You can read and write for you during the exam time. No problem. So next one, what are the advantages to the investors? For example, if you invest 10 lakhs on the commercial bank, so with the commercial bank have the audit, what kind of advantages you can receive or you can feel, what kind of advantages you may have. So the first one is a protect interest. Protect interest mean you invest some amount of money in a particular business, 10 lakhs or 10 million. So the investment, you can protect your investment. You can receive your investment. The protection should be there because of the audit. Because audit report says the current situation of the business, no? So then we can easily protect our investment. Second one is a moral check. Moral checking. We can say the check, the QC can check himself or herself about a particular business because of this audit. This is another the advantages or benefit to the investors, because morally they can check it's a good or bad of the company, because when they read the independent audit report, they can easily get to know the right or wrong the companies, whether the company is on whether the proper track or not. Then it's a proper valuation of investment. If they invest, definitely good value should be there for our investment because of this audit. So the good security, nah? Yes, the satisfy. Yes, the security is there. That's much of benefit we can receive. Different people, investors receive from the audit. So there is generally the other advantages are there. Evaluate financial status. Yes, because they evaluate the company. Because the audit report says the company, all the information of the company show the true and fair view. So that's all the financial situation we can easily understand, because the financial situation are given in the balance sheet or statement of financial position. In addition, it is audited. Then okay, that's fine. Then settlement of claims. So the based on this one, the make these claims, settlement of claims. Then evidence in court. During some court cases, can use that one as evidence, because the company had the audit, no? So then there's a court, there's a value is there. Settlement of accounts, yes, they can easily settle the account. Then facilitates taxation, so that is easy. The support to the tax calculation, also taxation services. The company had the audit report, then is a tax authority feels some easy, no? That's a fast, that's good for the taxation calculation, so that easily they can do it. So these are different type of the examples are there. It's better to remember some example for the business people and business people and investors separately in the exam point of view. Yes. So then is a final one. The final one in the today video lecture that I'm going to talk about is limitation. We are going to discuss. We are going to see the limitations, so the drawbacks of auditing. Earlier we discussed advantages or benefits. This is the limitations or drawbacks of auditing. So the first one says its cost. That's a problem, no? That's a cost is a problem. That's really the cost of an audit can be very high. That's the problem. As I told you, as I mentioned you earlier, the company had to pay 5 lakhs, 6 lakhs, 8 lakhs, even 10 lakhs also. That's of course is a problem. Second one is the disruption caused to a company's staff during the audit. That's okay now, because during the audit process, the auditor, member of the audit team may ask so many questions. They ask to ask the particular employee to take the particular document or books or whatever it is, so that that sort of disruption should be there. The company staff may feel some kind of uncomfortable inconvenience because they feel the auditors, the audit members of the audit team disturb themselves. There is another limit. Definitely that's okay, no? Because the morning, the bank, the commercial bank, the morning time, they are busy, no? The counter. So the time you can imagine the audit process is going on there. So auditor asks the audit members of the audit team asks so many questions, so require the different document for investigation purpose. So they have to respond to the auditor. So then that's another limitation of the audit. Third one is a non-detection of errors and fraud. This is important one. No, don't think that when the company have audit, there's 100% audit can find errors and fraud or detect the errors and fraud. Don't think so. So 100% is impossible. At a certain level, they can find errors and fraud. That's what the finally auditor gives opinion, not the actual results. I remember I already told you that the things, no, term opinion is something different from the actual results or accept results. That's what auditor gives her opinion or comments on the financial statement, which are examined by himself or herself. So that's another problem, no detection of errors and fraud. Something is there. Auditor may not be able to detect intentional serious issue. The particular company, the staff, the employees of the company, if they did something intentionally, so then how the auditor can find those things? No, impossible to find because the person was a human, no, not a any technical person. No, this person is how the person can identify these kind of intentional issues. So other one is a dependence on explanation by others. During the audit process, auditor need a explanation from different people of the company. Okay, auditor has to depend on the explanation or explanation and information given by the responsible officers of the company. So auditor sometimes investigate or interview the different executives. So whether right or wrong, the auditor depend on those people's explanation. The auditor don't know whether it's right or wrong. Auditor doesn't know whether right or wrong, but they said something. Auditor should assume is correct. It is correct. So that is another problem or limitations or disadvantages of auditing. Don't depend on opinion of other people. Opinion of other people. Audit has to depend on views of opinion given by company lawyers. Each and every public company have their lawyers, or solicitors, or engineers, or architects. So what they say, auditor should believe, should trust what they said. So he cannot be an expert in all the field, no, the architecture. So because auditor is the person is a expert person is okay, but person is expert in the some areas because architecture activities, architecture is some other field. The auditor, we can expect the person should be expertise in the architecture, engineers. So the what of those people says, auditor, okay, understand and accept, agree, should agree. This is another problem. No, it may be wrong. Other one is the effect of inflation. This is a gentle environmental factors. This is a common one. This is another reason, inflation. So financial statements may not disclose true picture even after audit due to inflationary rate. So that's a general factor. We cannot avoid it. So other one is the corrupt practices to influence auditors. This normally happen, no? The correct practices, the company, client company staff, or client company, the employees try to use some the correct or wrong practices to interfere the auditors. So how the management may use corrupt practices to influence auditors and get a favorable report about the state of affairs of the organization. So they try to interfere, try to influence in the process of the auditor. They try to give some motives, financial motive to the auditor, such a way they behave. So this is another uh, problem of the auditing. So other one is a conflict with others. Definitely conflict will occur during the audit process, 2 months or 3 months, definitely the big fight between the client staff and the auditor. So because argument may be there, auditor may have difference of opinion with the accountants or management. So because when the auditor interviewed the accountants, auditor expects that some different answer, but the accountant, the way the person explain is different. So that's some kind of argument is there. So that creates some sort of conflict with the different people. This is another disadvantages of audit. So then it's a no assurance. No assurance. Auditor cannot give any assurance about future profitability and prospect of the company. Please keep in your mind, this is also very important. The MCQ questions, examiner may ask don't think that auditor guarantee the future profitability, future viability of the company. Don't. The auditor just check the document, give the opinion on the information given on the financial statement. Don't guarantee the future viability or prospect of the company. That's not the work of the auditor. Then final one, detailed checking is not possible. This is another important one. I hope that after the mid-semester, the provisor will explain this, the sampling or some of the areas clearly. Just I am going to touch this point. The detailed checking not possible that mean I don't think that auditor check all the 100% documents or transaction of the particular company. Do you think that auditor check thoroughly all 100%? No, impossible. How is possible? Because the 12-month transaction, after 12 months, they prepare the financial statement. The auditor is going to check the final statement, which prepared by those management people for the 12 months period. So the audit period is very limited one, maximum 3 months. Within 3 months, they try to finish their audit work and give the opinion. So the generally, obviously, you know the answer question. How is possible to finish the work within 3 months? 3 months, 12 months work done by the accountant or management. So that's what they do, auditor do. Actually, they use some sampling technique. Sampling means they randomly take some transaction. So then the TV you hope you watch some kind of the stories in the channel, the factory, how they produce the particular product in the bulk. So how they may make sure the quality of the particular product. So do you think that all the company, the older 10,000 packets of particular sweets, they check each and every one? No, randomly they take. No, they use some random basis, take and check it. So everything is okay. Then they conclude that all the things are fine. That is a random sampling. Here also to use the sampling. There is a detailed checking not possible. Don't think that 100% is checking done by the auditor. Auditor cannot check each and every transaction. He or she may be required to do test checking by using the sample. Test checking only, just 2-3. From the fixed asset register, just check 1 or 2 transactions. If it is the both 2 transactions are fine, then auditor conclude all the recorded records are fine. From the inventory books, they check 2-3 transactions. From the bank account, check 2-3 transactions. So such a way the auditor use sampling method. So these are the limitations or disadvantages of auditing. So here, just I am going to finish today's video lecture. The next lecture we will discuss the balance part. Most of the balance informations are the additional one. It is better to have another video lecture. So here today lecture, actually so far we discussed these things. No, we started from this one. Needs or necessities for an auditing. What are the needs or necessities for an auditing? The different needs are there. So then we discuss about a demand for audit and assurance. So then we discuss for the different conditions lead to this demand for audit and assurance. What are those conditions? A conflict of interest. So second one is a consequence. Third one is a complexity. Fourth one is the remoteness or separation of users. These are the conditions lead to the demand for audit and assurance. So then we discussed some theoretical ways you can explain this that create the demand for audit and assurance. So what are the theories clearly explain the demand for audit and assurance? Agency theory, information hypothesis and insurance hypothesis. So we discuss clearly one by one. Then we move to this one, the features of auditing, aspect of auditing. Some aspects are there. So then we discuss the advantages of audit. We discuss differently the advantages to the business people or business organization or particular company or particular firm. Then what are the advantages or benefit of audit to the investors point of view. Then generally the advantages. So finally we discuss the limitation or problem of auditing or drawbacks of auditing. So different limitations are there. So students, I hope you understood my lecture. So please watch this. Now I am going to upload this, put the link in the LMS. So please, when you get a free time, please watch the video and read the handout, because coming 17th, your exam, the first assignment exam. It may be the MCQ exam or sometimes quiz exam, maybe structured question. So still not I decide. Later I will decide what mode of exam. Okay, then fine. I'll meet you all in the next video lecture. Thank you.